Welcome to Inside the Deal. I'm Mary Kathleen Flynn, and I'm here with Tom Baruch from CMEA Ventures. Tom, let's just start before we get into all kinds of thorny issues about the economy
Sure.
and venture capital today.
Mm-hmm.
Let's start with setting the stage. CMEA has been around a long time.
Right.
Give us a feel for the genesis and the portfolio.
Sure. CMEA was founded in 1989. We were originally a part of New Enterprise Associates, which is one of the world's largest venture capital firms. Our focus is on life sciences, information technology, and energy and materials. So we have technology investment practices in those three application areas.
So let's talk about the economy. Obviously, you've seen dips before and different
yes.
economic cycles before.
Yes, for sure.
Put this one in perspective for us.
This one is unique. It's unique in many ways, primarily because the world has become a great deal more complex. And the information technologies that we've created to facilitate transactions have now bitten back at us in creating a much larger and more global recessionary decline. And I don't think we exactly know how to deal with this because we've never dealt with it before. So it is novel, but we do have tools available to deal with it. And I believe that this, like all other economic declines, will over time turn around.
In terms of managing your portfolio companies, does that translate into a conservative approach right now? Are you involved in shoring up reserves, making sure that they're well funded?
Absolutely. We maintain a reserve for every one of our portfolio companies. We're very disciplined in how we manage that. We review our available reserves for each portfolio company on a weekly basis.
Every week?
Right. To make sure we have enough capital available to underwrite the activities of the companies going forward. At the same time, for those companies that are near commercialization, we're being very careful to keep the company sized in proportion to the near-term business opportunities.
Are you talking about in terms of valuation, looking ahead toward exits, or something else?
No, we're talking primarily in terms of operating costs. So we're trying to get companies to cash flow break even as quickly as possible. And that means demonstrating the commercial feasibility of their products and the customer acceptance.
What about return on investment? Are you already anticipating that you're going to have lower returns than you've perhaps enjoyed in the past?
That's hard to predict. Obviously, you don't want to predict a failing outcome. It's possible, but it's also possible that we won't see that. It's also possible that this economic decline could be followed by a very rapid expansion phase, especially as some of the newer technologies get more firmly implanted in our economic base. Time is definitely an enemy. As you know, compound interest is very much a basis of time. And when we lose time, we do possibly lose the ability to make a significant return. But it definitely puts more of a burden on us to be more successful at the end of the day.
Last question. What do you think is going to be the biggest impact on your portfolio companies and in your investing from this recession?
During the past several years, we've shifted our investing to almost 50% in the field of what we call energy and materials. We believe that there will be a continuing demand for companies that are introducing new commercial technologies in the energy field. We feel that's relatively independent of the price of oil because most of our companies are energy providers, and the price of energy remains relatively constant, although the price of oil may shift quite dramatically. So we believe that the issue of energy independence, as well as the issue of global warming, will continue to create significant demand for the kinds of companies we back.
All right, we'll leave it there. Thank you very much, Tom Baruch from CMEA Ventures. Thanks for watching Inside the Deal. I'm Mary Kathleen Flynn.